Well, if you're here, this is no surprise. This is another episode of the Kinvestor Report where I chat with industry experts to discuss the market, commodity stocks, and the economy. I'm your host, Arlen Hansen. Today, I'm joined by Garrett Goggin, Chief Analyst and founder of the Golden Portfolio, an online newsletter bringing you the ultimate gold portfolio insights. Garrett and I met in Frankfurt back in November and caught up again this week in Vancouver during the Vancouver Resource Investment Conference and the Metals Investment Forum. Lots to talk about. And I thought this would be a great opportunity to just pick his brain on what was hot, what were the themes, what was not, sentiment, and the craziness of the market, and what we're looking for in 2025. This is not investment advice. I'm not a financial planner or investment advisor, nor am I a geologist. However, I've licked a few rocks in my life. If Kin or myself has any financial interest or equity ownership in any of the companies mentioned in today's interviews, it will certainly be disclosed. Do your own due diligence. If you like this video, you can tap that like and share button below and be sure to subscribe to our channel so don't miss any of our latest videos. Garrett, thanks for joining me today. How you doing?
Yeah, good, Arlen. Thanks for having me. Look forward
Yeah,
to talking.
yeah, right on. Well, we met in Frankfurt at Kai Hoffman show, and that was a great introduction. We went down the rabbit hole a little bit, which was fun. And we recently caught up again at the Vancouver Metals Investment Forum and the Vancouver Resource Conference. How are the shows for you?
The shows were great. This was my first Metals Investor Forum, and it was my first time to Vancouver. And being a mining analyst for 15 years, Vancouver is a hotbed of mining activity, so it was great to visit the city. I grew up in Boston. Boston's right in the water. It's kind of like West Coast Boston, with the history and the culture. Um, and then, the show was great. It was my first one, but it was packed, all the presentations, right? 300 people jammed in there. A lot of good presentations, a lot of good companies. I just, you get the higher price of gold here, and I think it's driving a lot of enthusiasm in the sector. But the thing that's wild is you get the gold almost breaking out to new highs here, but the valuation of the miners and the explorers and developers, it's the lowest it's been in over 20 years. I believe it represents a massive opportunity. I do a lot of fundamental and quantitative stuff. And yeah, the miners are trading at, 16%, 16% discount on a free cash flow to enterprise value discount. I just think the smart people are picking it up, and the smart people are doing their homework right now, and they're starting to get acquainted with the names that they want to invest in to get in before we start taking off higher again.
Yeah, I that was certainly a theme that I saw kicking around both those shows. Is like the valuation on these things, just crazy, 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 crazy. And someone who's buying stocks and holding their nose and waiting is probably going to be greatly rewarded. Rick Rule, when he was up there talking, he was just, there's no excuse for you guys all not to be multimillionaires when we're done here. I loved his talk was great too. So on top of that, at the shows, what do you think the big theme was around these shows? Was it copper? Was it gold? Was it energy metal transition? Was it like where do you think the people were leaning towards?
Definitely gold, with gold at an all-time high, people are leaning there. There's a tremendous, underinvestment in the commodity sector for God, like 20 years.
Yeah.
And the world growing, you get copper deficit. I've always been attuned to, silver, and, silver's an industrial metal. There's used for make solar panels and EV and batteries and stuff like this. And silver's been in a deficit of 200 million ounces for the past 3, 4, 5 years. So, they want the economy to keep growing, but we've been not investing in the metals and mining sector for decades.
Yeah. And so that's not just on a retail level in the stock market, it's also on a corporate level, don't you think?
Yeah. No, I'm looking at it from, a corporate sort of level, like
Hmm.
who's going to bring the supply, to the market regarding the copper producers and the silver producers. And I just think, I don't know. I just think everything comes down to, money. If, people see that there's a tremendous opportunity there to make a tremendous amount of money, they're going to get back involved with the sector. You get the larger gold main producers. They've been moving towards gold. You get VRIC. They got their big copper project that's in, where is that? It's in Saudi Arabia, actually, right over
Hmm.
And copper's, it's pretty profitable to produce, and it's a little more stable than gold. But that just shows the dissatisfaction with the gold sector and silver sector, and everything moves in cycles. And, even within a gold all-time new high here, almost, we're at like the bottom of the sentiment of this sector, which, makes me believe we've got a long way to go.
Yeah. Well, we're certainly not hearing the Cactus Club servers talk about buying gold stocks yet. Right? That will come, right?
Have on move, I'm going to stay far away from Vancouver, yeah, because
Yeah. Okay. So while we're talking about copper, were there any particular stories that you saw either at the MIF or at the VRC in the copper space that was making a bunch of buzz?
I don't know. I write the gold portfolio. I'm focused on the gold miners
Okay.
and silver miners. Like I believe in copper. I like the profitability of it. I cover 70 companies right now. My bandwidth is just,
Okay.
kind of out. So
All right. Well, then let's stick to gold. What were some of the gold names that stood out?
I don't know. I follow. So let me I gave my presentation. You saw my presentation at the
Yeah.
at a lot of people look at the producers and they look at Newmont, they look at Barrick, they look at Agnico. And the deal with the mining industry is you need to drive economics on a per share basis. Share prices follow earnings per share or gross profits per share. If you ain't driving those higher, your stock price isn't going higher. A lot of the mining companies have been cutting back over the years, selling smaller tier two, tier three assets. Their production's been stable, decline a little bit, but some of their profits and earnings on a per share basis are cut in half. People talk about Newmont. They're like, oh, Newmont's so undervalued, Newmont this, Newmont that. Listen, stock price follows free cash flow per share. Newmont's free cash flow per share was like $3.50 at the peak in 2011. Now it's half of that. It's at $1.75. So it's no surprise to me that the share price has declined to match the profits per share. And I follow miners that are deep in the troughs of the Lassonde curve, right? That everyone loves to talk about. It's true, you find explorers with some good drill results, high grade drill results. I follow high grade drill results very closely because that's the only way you can move the needle as far as revenue and profits. And once a miner finds a few good drill holes, it takes years to develop that project out, to define the resource, to build an economic study, and there's value added every step of the way. So that's that first peak in the Lassonde curve, and then the second peak is when they have to go through financing. It's resources defined. It's got to go into financing. You're not sure whether they're going to sell all shares or debt or do a stream, and then after it gets financed, what happens is you get a company. Let's talk Montage Gold. They got
Yep.
Kone in the CDI, right?
Yeah.
It's $2 billion NAV. The stock's trading at 500 million enterprise value, and they just did a stream with Wheaton Precious, like $710 million. Covered all their financing. It was a great way to do it because they didn't have to sell any shares, maintain basically full equity value, drop the NAV a little bit. But you got the stock trade at 50 mil EV. You got the NAV at 2 bill in 2027, and at first production, EV should rise up to match NAV on that first production date 2 years from now. Those are the kind of opportunities that I like. And there's so many of them where I'm just looking at money on the table. Goddamn, I got Longcore Gold. It's extremely unknown. They've done no marketing. It's in the DRC, and yeah, DRC, but Bristol's been operating there for 15 years with Kabali, right? It's one of the
Yeah.
mines of the world. He's had no problems because he treats everyone as equal stakeholders. Everyone receives their fair share. Longcore is trading at about a 50 mil enterprise value in their project, a Dumby. It's very close to a tier one gold mine. It's going to have about 5 million ounce reserve after their deep drilling in a month or two. And that's worth like 1.6, 1.7 billion. That represents like 30x upside. It's just the value I see out there is absolutely compelling. And that's what I'm talking about with the gold price being high and the valuation of these miners being absolute bottom basement. I look at sentiment surveys. I follow the money. You look at the SPY ETF, which is a popular ETF to invest in the broad market in the US. and the GLD ETF, which people use to invest in gold. In 2011, the SPY and the GLD had the same number of assets. They were equal. There were as many assets in gold as there were in the S&P in 2011. That was the last peak. Now the GLD assets are like 3% of the.
Yeah, 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 yeah.
So there's no money in the sector.
Hmm.
No, and I don't blame them, and I get it, but it's a biggest opportunity I've seen in 20 years.
Yeah. When you talk about like the montage and the long course story, I just feel like the sentiment is like investors don't believe they're going to get over the finish line. Right. And that's what's crazy in these valuations. But when they prove that they can, and hearing about that Wheaton deal, like, my God, yeah, the money's there to get this across the finish line. Now it just takes a little bit of patience, right, to see this thing through. Right. But if you want that 10, 20, 30x, I've never had that overnight, right? Ever.
Yeah.
Right. We all, there's a lot of fun in this game on an exploration drill hole that we can all dream that we're positioned in something and they magically hit this great intercepting. We get 10x's, but that is very, very few and far between. Um,
Exactly. And having Wheaton come on the table with Montage, it adds a vote of confidence that the project is actually going to get there. But that's why my GP 10X, I have 30 developers and explorers in it, right? Because a few are going to bomb, but you're also going to have a few that are going to do really, really well. And you let your winners run, you let your winners drive, the total profits of your portfolio, and all you need are one or two real big home run winners in order to like have your portfolio go through the roof.
yeah.
You just don't want to get oversized on fall in love with the story, get oversized in one position, because that's going to lead you to make stupid decisions on the way up and on the way down.
Yeah. And then what do you tell investors if they've made a big win like this? Like how to sit on their hands? Because sometimes when we have a big trade or a big investment, we start thinking we're smart.
Yeah.
Right? And what's your advice to investors then? Like take a
Yeah.
breather, like go back to basics. Don't be
Yeah.
dumping too much money into the next deal just because you want to 10x that again.
Yeah. I would tell people, you take a little off, right? You take whatever, 5%, 10% off. But if I look back upon my investing career, I'm from Boston, traditional, invest for the long term, but goddamn, you look at all the stuff that's gone up a tremendous amount. You look at Amazon, right? All the stuff we use and love. Amazon, oh, it's too expensive at, 100. It's too expensive at 200. It's like, no, it's got particular things that are driving its performance now, and it's going to continue being a leader in their industry and drive its performance later. You need to hang on to these winners because they have an intrinsic edge, and that's what's been driving the performance. That's what the stock price is telling you. You need to allocate your portfolio to winners and cut like all your losers. And if we were just able to hang on to our winners, over the years, we'd all be multimillionaires.
Yeah, it's you're kind of like betting on the Yankees, or in your case, should I say the Red Sox? Sorry, buddy.
Yankees versus Red Sox, yeah.
Right. When you're keeping your winners, you're putting your money in with the management teams that continue to prove that they can create shareholder value.
Yeah.
Right.
Yeah.
When you hold on to your losers or kind of grasp at straws, you're betting on management teams that aren't showing you they can deliver shareholder value.
Exactly. And
Right.
there's a whole cast of characters up there in Toronto and Vancouver, and everyone knows each other, and it's a relatively small industry. But you know who the value creators are. Like, have the Lundins ever lost money in any freaking deal that they've done? It's absolutely unbelievable. So, you see other deals that the Lundins are involved in, and it's a stamp of approval, and
Yeah.
you try to get exposure to them at any cost.
Yeah. Yeah. Well, I'm sure they've lost money somewhere
Yeah.
because we don't bat 1,000 in this game. But yeah, no, their record is outstanding. Who are some of the other kind of real management teams out there that you think drive a lot of shareholder value? Any off the
Um,
top of your head?
G mining's interesting because what is it, the Gignac family and their mine builders, right? They built Roosevelt, they built Marion, and their whole concept is we're taking mine builders, we're gonna have the guys build the mine, and then they're gonna build a processing plant, and then they're gonna run the processing plant. So it's a whole integrated model. And they know the right price to pay for assets. The reason why I became attracted to them is because they bought over one of my GP members, Reunion Gold in Guyana, right?
Yeah.
And they're building that out, and then G Mining just started Tokenizino in Brazil that is going to do about 300,000 ounce a year that just started production like late last year. These guys are focused on the right metrics. They're focused on the price paid for the asset with the capex, and then are we going to get enough profits after that in order to move the needle as far as earnings per share? And these guys were private mine builders, so that's what they were focused on, is getting involved with projects that were really going to move the needle for them. Whereas you get a lot of the majors, you look at the capex, you look at the amount of money they pay for an acquisition, you look at the capex, you add that up, and like over the life of mine, a lot of their projects like don't make enough money to even pay back that initial capital, and that's coming out of shareholders' pockets. That allows management to continue their jobs, that allows bankers to get rich off all the deals, and that allows the earnings on a per share basis to be cut in half, which screws shareholders. But the management doesn't care because their production is stable to growing and they're making their money. I don't know. There were a lot of stories out there that I was happy to see. One of the I love the royalty sector. Do you like royalties?
Yeah, no, I wanted to dive into that too as well, because I think, when you talk about EPS and earnings per share and shareholder value, like that's the model that is proven time and time again with the right people, it makes a lot of money for shareholders.
With the right people. Like, so I've been covering the industry for 15 years, covering the royalties. I see the royalties doing really well. And I'm like, God damn, what if you just made a royalty portfolio? You would have been up 13,000% since 2007 when Franco came out. Yeah, it's like, it's a boring portfolio. It's kind of like watching paint dry, but it's 24 karat gold paint. And the reason why the royalties perform so well, there's like six main reasons. But actually, I just did a report on Royal Gold. They showed their revenue and profits per employee. It's better than Google. It's better than Amazon. It's better than Facebook. They only have like royalty companies only have 3 or 4 or 5 employees. You got a
Yeah.
G. You don't even have to have a geo. You can hire geos. You got someone to count the money and a lawyer to, write the contracts, and that's about it. It's a pretty amazing structure, and then they have fixed costs, right? The deal, when inflation pushes gold higher, costs follow. So
Yeah.
miners' margins are no higher now than they were like 15 years ago. They're like 45% on an all-in sustaining cost basis, and the GDX basically follows that because it tracks profits. So it doesn't surprise me where we are right now as far as valuation, because costs have increased so much. But that's what happens in the sector. And then royalties, you get free exploration upside, right? They do their contracts over the initial life of mine, maybe a little bit exploration value. And then, as the mine keeps going along, they find more stuff. The royalties get that for free. You look at Franco Nevada, that paid $2 million for Homestrike out of an ad in the Elko Gazette where Pierre Lassonde went down and bought it, and that's delivered, God, like $1 billion of value with another billion to go from Goldstrike. Like, it's
Crazy.
absolutely astounding. These royalty companies, they own 175 different royalties. All they need are one or two to get lucky, right? Whereas get one miner, like, I don't know, First Quantum, where Panama comes in and shuts down Cobre, and they're toast. It's game over. But the royalties, if one or two or three go bad, or 10, it doesn't matter. All they need are one or two to go right. It's kind of like the investing, what we were talking about before, right? Like, ride your winners, let that grow to a larger portion of your portfolio. And then the last thing is all the smaller royalties, they all get taken out. I've seen like 15 acquisitions over the past 10, 12 years. Any smaller royalty with a decent like crown jewel royalty, they all get purchased. You get Maverick, you get Nomad, you get Ely, you get Great Bear. It's just the list goes on and on and on. And then that leads me into a couple royalties. There's Globex that was with me there on the show. Globex trades for about 50 mil enterprise value. They got 20 mil in the, I'm sorry, 50 mil market cap. They got 20 mil in the bank, $30 million enterprise value. You could basically take this company over, start selling their assets, put 20 million cash in your bank, and you do very, very well. But it's Jack's stock. He's a conservative. She's a cheap investor, and he prefers, I call him frugal, but he's cheap. He like, I asked him, coach. He doesn't fly first class. He's like, drives a pickup. He's a perfect dude that you want to give your money to invest shrewdly. So they've got a few projects that look like they have the potential to go big. They got Mount Sorcy, a big iron ore project in Chibougamau. It's clean iron energy. If they get that, they get $12 million a year at a royalty multiple, values the company like 10x higher. It's just amazing. And then one other story. Do you know Silicon Merlin?
No, I haven't heard that one.
Silicon Merlin is in Nevada, and AngloGold found it just like 2 years ago, and it was deep in the financial report. I ended up, I don't know exactly how I found it, but I go through financial reports all day long, and I found this. I'm like, holy shit! And then they started drilling, and they discovered 13 million ounces of gold in like less than 2 years. They did a small little economic analysis on it. It's going to be one of the largest gold mines in the world at 1.6 million ounces in year two, and then Origin.
What?
No, it's in the biggest gold mine you've ever freaking seen. Origins owns a 1% NSR. Altius owns a 2% NSR, and it's worth I think like 20 mil for Origin. And that is a crown jewel asset. Altius just won a lawsuit around surrounding land around the original claim that they partially won. So there's something that's going to happen. I don't know if they're going to combine the royalty and spin it out, but it's going to be the greatest royalty the world has ever seen. It's just amazing. So I'm focused on, trying to find value like within the space. I'm not a big like story guy. Do you know what I mean?
Yeah, yeah, no, that makes a ton of sense. I'm going back to the royalty model here. Are you seeing some of these royalty companies starting to buy their royalties longer out in advance? Right? It's not like, hey, here's your last, 100 million to get you over the finish line. We're willing to put in, what Wheaton did, 700 million for production that's coming out 2 or 3 years down the road.
Yeah, well, it's all about the NAV model, the DCF model, right? The spreadsheet. You lay out your mine plan, it's over 10 years. You look at the gold produced, you look at the free cash flow produced, and you come out with a NAV model, NAV estimate. That's what I do. And then the royalty model, they use that as well. They will take the mine feasibility study and they'll go, okay, you're going to do 400,000 ounces a year. Give us 1% of it. Or if a streamer, give us 5% of it. And you can model that. And that has got
Hmm.
discounted value at the beginning. That's what the royalty company pays. But the royalty companies, they're ripping off the miners because these mine plans are dependent upon a gold price prediction, right? None of them use the current gold price. A lot of them use like BMO's price deck that show, a $2,400 gold now and that going down to $2,000 gold in year 10. So the royalties are getting like free money on the table. And they're paying for the whole life of mine. If there's vast exploration upside, the company will ask them to pay up for that they'll have to model. But yeah, the royalties are paying for that full like stream over the life of mine.
Yeah. And then how are these I got to imagine it's going to be becoming very competitive in this royalty space, right? Obviously, the wheat and precious metals leading the charge. Everybody wants to be the next one,
Yep.
and I'm starting to see like uranium kind of stream companies out there, et cetera, et cetera. If we're looking at all these gold ones or silver ones, like how do we pick out who's going to be the next winner? Like, that there's a lot of them out there now, and I think to be successful you have to have that crown jewel, you have to have access to capital, and you have to be able to get in the door of these rooms in the first place. Like, how do you pick out those guys?
The all the royalties, it's a very competitive marketplace. They all have different models, you know what I mean? Like, yeah, as you said, Franco and Wheaton and Royal are looking for really like big deals. They're all looking for bargains, but each smaller royalty company has got their own model. Like Vox Royalty, that got started with like a database, like in Australia. What's his name? I forget his name, but he had a database of all the royalties, and then Vox started going on all the royalty owners. And one of them was like a beer company, one of them was like an automobile manufacturer, that didn't know how to value these things, and they were able to pick these up for pennies on the dollar. Origin discovered Silicon Merlin using Avarice data. It's AVERIS. It's a NASA, it's a publicly available website. It's called avarice.com, and it's NASA data. It's NASA satellite data. So they had a smart geologist that was able to like go over and use this Avarice data, apply whatever technology, AI to it to identify particular regions that looked promising. So, they identified Silicon Merlin, and Origin spent only $100,000 to like stake all this land and for the exploration. And now they're getting 1% of Silicon Merlin's gold, which is 100,000 gold ounces. So like I'm in the newsletter biz, right? So I do all the research and I do all the fundamental stuff in the spreadsheets, and that's what I'm good at, and that's what I like. But there's a lot of market involved in this in the newsletter business. Unfortunately, I have to do some of it too. But there's guys in the gold space that have no idea what they're doing. But they're like, learn how to learn how to get an ounce of gold for $40.
Yeah,
Learn
yeah,
how to get an ounce of gold for. I'm like, yeah. I'm like 6 minute. I got 3 minute abs. I'm like, learn how to get an ounce of gold for $1. That's what Origin did. So
yeah.
yeah, each, and then a lot of them are prospect generators. Like Globex was kind of a prospect generator. They have 250 properties. But what happens is it takes a while for these properties to mature to get close to
Of
production.
course, of
And the stock's
course.
really not going to move. There's NAV value a little bit, but they're really not going to move until cash becomes more of a reality. So it takes a while for these prospect companies to turn into royalties, but the cusp of that is like that's where you make your money.
Yeah. I sat down with Nations Royalty at the show.
Yeah.
Yeah, very cool. Really, really like their business model. Very strong team. I'm going to be watching them very closely. And I think that's a name that, gets in the rooms. They've got the backing behind them to get into the rooms to at least get a shot at some of these deals. Because I think that's where some of these smaller royalty companies, they're just not even going to get access to the ones that like the crown jewels, personally, right? But it can be done.
And I've been watching Nations Royalty as well. Their stock hasn't gotten moving yet. They need to sign some deals in order to get the stock moving to, help a deal that is like wider ranging, right? You know what I mean? Like, all right, give us the royalty deal. We'll help you out with permitting. We'll help you out with everything. We'll help you out with workforce, like a more, hand in hand relationship. I'm attracted to it too for the same reasons. I haven't seen much yet. And
Yeah.
that
And I think they have an opportunity to change that. And that's what I like about their business model. And because I think there's a lot of value for both sides there. All right, what are you looking forward to in 2025? What's exciting you?
I don't know. I'm pretty pumped up, just people look at gold, they're like, oh my God, it's at 27, it's so high. No one's invested in it. The stuff I've seen, no one owns it. So we're going higher until assets start returning to the GLD, assets start returning to GDX, and that's a lot higher. And I tell you what's coming. Like I just said before, I was watching Trump. The past couple days in the United States have been insane with all the news and the Trump, declarations and what he's doing. But his Treasury Secretary is Scott Bessent. Scott Bessent's largest holding is gold. Scott Bessent has said that the Fed needs to work more closely with the Treasury. We need like a shadow Fed member from the Treasury to work with the Fed. Donald Trump just said we need rates lower. We got to have rates lower. Like rates are going lower. But the problem is, right? The Fed started cutting rates. The 10-year bonds started going up like 100 bips over that month or two. So you can't control the long bond with the Fed funds rate. But what you can do, implement yield curve control, right? Like QE5, where the Fed is going to use the balance sheet in order to buy bonds to support the enormous debt load. Like all the US debt, $37 trillion, it was all on the short end due to Yellen. Bessent needs to move it to the long end, and to move it to the long end, like we need lower rates. And the Fed can't do it with straight, Fed funds rate. So the Fed's going to use their balance sheet to start taking down Treasury assets to manage the yield lower. This is QE. This opens up the door. This shoots gold to the moon. It's going to shoot like all Trump cares about is making money. As long as we're making money, it's all great. He just like the whole Trump token meme coin. He's like, well, hey, we're making money. But the thing is, money, a bottle of Coke's going to cost like $20 in like 2 or 3 years because inflation is going to be so incredibly high. Because we all know that inflation comes from too much money chasing too few goods, and the money supply is just going to continue to increase.
Protect your wealth.
Yeah, protect your wallet, and gold's been the historical way to do it. And then,
Yeah.
like Bitcoin, I think Bitcoin has stolen a lot of our thunder. And one thing that's interesting regarding Bitcoin today is the U.S. Bitcoin Reserve, right?
Yeah.
That they're talking about. And, I see it happening, like no doubt, like it could happen today. But the thing is, it's all priced in. Like everyone's talking about it. Everyone's been investing in this for like a year or two. There's this dude on Twitter, Jason Lowry. He's a kid that went to MIT. He's in his 20s. He was on Twitter. I was following him. He wrote a book called Software. Got it right here. Novel Theory on Power Projection and the National Strategic Significance of Bitcoin. He started talking about this on Twitter back in 2023. And then he went quiet. He ghosted, right? He disappeared because like the government saw that and they embraced it. And he's like part of the military, part of the US Space Force. And his book, you can't buy it on Amazon anymore. It's out of they took it out of print. It's like cost $4,000. So it's
What?
yeah. It's wild. And this kid, he was great, but he just totally ghosted because the government and the CIA and they all picked it up and they're running with it. So the time to buy Bitcoin was back in 2023 when he was talking about this, when you saw the
Mhm.
value in it, and Bitcoin was at whatever, 10,000, 15,000. But there's something about gold, like being able to physically hold it, like especially in wartime versus Bitcoin. Like I don't fully understand how Bitcoin can provide us, national strategic safety versus like a hard asset where if there's a war, like we're going to go take your gold out of your vault and take it back to the United States. You know what I mean?
Mhm.
Can't do that with Bitcoin.
Yeah, no, I'd agree with you. I'm more in the gold camp, right?
Yeah,
I want that physical. I want to hold it in my hands. I want it in my safe, far
yeah.
from where the banks can get it and anybody else can get it in that time that I need it, right?
It, yeah, you can pry my gold bars out of my cold dead hands. Yeah,
Yeah.
Bitcoin. Who knows? And then the other thing too is, the mining industry, it's all old people, right? My average subscribers, older. The younger generation, they embrace digital assets, they embrace tokens, they embrace just everything but gold. Like there's no 20-year-olds, there's no 30-year-olds that are invested in the gold sector. But what are like Bitcoin is the gateway drug to gold, right? Because it's the same story. Oh, I'm investing in Bitcoin because there's only whatever 23.2 million Bitcoin ever going to be printed, and I'm
Tulips.
and myself from currency devaluation and inflation. It's like, yeah, what do you think gold's been doing for 1,000 years? So if and when Bitcoin ever stumbles, all those Bitcoin people have already been adopted into like the gold standard and come to the gold space. And the smaller gold explorers, those were like crypto tokens,
Oh
right?
yeah. Oh yeah.
And they're going from 10 cents to $100. And, I think we're going to have our day again when these, gold explorers are going to be trading like crypto tokens because at least they have the gold explorers have some sort of value. These crypto tokens have absolutely zero value behind them.
Yeah, I agree. Well, what's interesting is like if you're under 40 years old, you've probably never made a penny in mining stocks
Yeah.
because it's been a 15-year bear market, right? And you probably weren't cutting checks at 20 years old to buy
Yeah.
XYZ co, right? And
Yeah.
so you've also been right the last 15 years,
Mhm.
right? And so when you've been right for the last 15 years, it's really hard to change your mind until something changes your mind. And you'll change your mind when you start losing money on Bitcoin. And then you'll start looking for other asset locations to put your money into. And that's when I think this thing just starts going stupid.
Yeah. And like I
Right.
said, it's all about money. It's all about
Yeah,
making.
yeah.
And then when people start making money in gold stocks, the institutional community, they're going to have to get involved. When their portfolios are lagging some benchmark or something because gold stocks are going through the roof, they're going to have to get
Yeah.
involved. I believe the institutional community that values stuff, using spreadsheets, DCF or NAV, they see the value on the table. The value community is starting to come over, but the masses aren't here yet. And I agree. When these things start going up in price, the masses are going to be coming.
Mass psychology. That's how it goes.
Yeah.
Garrett, thanks so much for your time today. That was another awesome 40 minutes. I can't wait to hang out with you in Toronto at the PDC. And I want to bring you back onto the show so we can talk about what happened in 1971.
Yeah. Oh yeah. WT.
And we'll just leave it at that. If you don't know, you don't know yet. But when we show it to you, you'll be eyes wide open.
But yeah, golden portfolio. Go. I got my secrets of a mining analyst masterclass. Sign up for free and learn about how I value mining equities.
Yeah, awesome.
Good.
Garrett, thanks so much for your time again, buddy. We'll chat again.
All right, thanks, Arlen. Talk
Yeah.
soon.
Cheers. Bye-bye.